Hey, what's up, everybody? It is Crypto Trader here with Mining Trades. It is March 22nd. No, it ain't. No, it ain't. Sorry. It is March 23rd. Yeah, I'll fix that really quick. All right, so let's get into this. This is about fake volume. I came across a couple of articles, a couple of tweets, and I'd like to talk about this. But first, here's my disclaimer. All right, that's really quick. And you guys know I'm not a financial advisor. Don't pretend to be one, but I do show you guys what I do, what I trade, what's on my mind. This is a crypto focused channel where we mine, we take the earnings, and we trade with it. All right. Also, I do a lot of research here. I'm starting to think this is more of a research channel, but I'm fairly new, so please give me a break. Hit the like, hit the subscribe if you find any of this information useful. I'll be coming with it at least probably once a day, once a week. I'm not sure, but as I get it, come across it, I'll share it with you. So, what is this? This is OKX, right? What is OKX? All right. Well, look, really quick. I'm not gonna bog you guys down with too much information. All right. But pretty much out of these two companies here, Bifinex, and our friend here, CZ at CZ Binance, okay, in-depth analysis discussed with Sylvian. Now you like wonder who Sylvian is. All right. Basically, they talk about flash liquidity, these high frequency traders. Um, they're saying Binance is doing something against that. So we'll have to see how that pans out. But basically, it links to this article. All right. Linked into Medium, Chasing Fake Volume in Crypto, a Crypto Plague by Cillian Rhymes. Rhymes, I'm sorry. Okay. And look, it's okay, coin. I mean, OKX, I'm sorry. All right, but I'm not going to log in. I'm not going to trade on any of these things. Um, I just wanted to use that as a logo footage. Um, have an active trade on. But anyways, look, still testing out my bot. Here's the article. Would I read this? If I were interested, a lot of people are looking at, Bitfinex, which I always from day one from starting my channel talked against and said, you know what, Bitfinex is basically repainting their recent trades, um, making their charts, fabricating things, just things that are not even blockchain related. Like you can't do that with Bitcoin because everybody owns the ledger. They all, you know, check against all the other owners of the ledger, and that's pretty much what I believe has to end up being done with any exchange, even the ones on Wall Street. I mean, if it happens in crypto, guess where it happened first? Guess where they learned it from? Right, exactly. Wall Street. All right, so are the regulators really there to regulate? I mean, if you think about some of the most um, regulated exchanges like Coinbase, they're coming under fire right now for insider trading. So I mean, but what's interesting is when you get down to the graphs of this here, it talks about slippage, volume, OKX, Kraken, Bifinex. I'll try to blow this up as big as I can so we can all see it. Um, so what you see is red is for OKX margin trading. All right. Blue is for Bifinex. That allows margin trading. Okay. Green is for Kraken. Kraken. I'm not sure if they offer margin trading, but I believe that's one of the few places where, as an American, you can go and do margin trading. Um, I do all my margin trading on bitMEX, um, and then you got GDAX in blue. Now, the ones that are way up here are the most fucking manipulated, or just to sum it up, This is basically the slippage percentage for orders over 100 million. So when you get like 200 million, like say someone wants to dump or sell 200 million dollars worth of Bitcoin, where's the slippage? Well, for Coinbase, which is probably the only place where you would, well, they've actually got data for this, is bam, zero, basically zero slippage. All right. Okay. And right here, you see the red and the blue. Now, these are percentages of slippage. Now, these are orders for what? What is it? All right, change the color. That's a bad color, huh? Let's do orders. Orders at zero. There's slippage all around here, which is interesting. Um, OKX is pretty much a bad, like, if you're selling anything $150,000 or more, you can get some crazy slippage. All right. And anything around here, this is where we're at. Like me, I'm a retail trader, so this is where we're at. We're getting slippage. These are the reports, okay, from different times. Samples taken. And right here, look at that. Green, Kraken, blue, GDAX. Okay. GDAX is staying pretty much under 0.5 slippage, all right? So all right through there. Okay. Getting basically virtually no slippage from GDAX. Okay, that's great to know. I don't find that I get any slippage from um, bitMEX. I, I can prove it right now during this video that the volume that is on bitMEX is far greater than that is on Bifinex. Okay, and I'm going to do that. Read this article. I linked to it. I provided a link. Of course, I always provide links. If you ever watch my videos, all you gotta do is go down there, click show more, and you'll see the links. Um, Read this. I mean, I don't like doing research for people, but I point you to the research. Okay, how bad is it? It's obvious as it is, as obvious as it is that most of OKX's volume is doctored. How do we go about estimating whether it's 90%, 95%, 99% fake? I propose the following method: gather a list of trustworthy exchanges that all behave consistently on that regard, perform a regression on the combined data sets so as to be able to predict the trading pair volume from an observed slippage. Compare OKX claim volume. Okay, let's get up here. Maybe I should go over some of this stuff. I mean, in this piece, they expose why they believe more than $3 billion of all crypto assets volume to be fabricated, and how OKX, the number one exchange rated by volume, is the main offender, with up to 93% of its volume being non-existent. I'll endeavor to prove it by analyzing publicly available data. All right, when I set out to determine for this piece, I had no idea I would end up talking about fake volume. I initially meant to gather data about crypto assets liquidity. That could be a complement to volume. I thought it would prove an interesting indicator when assessing the value of an asset. I decided my metric of choice would be to collect order books from all major exchanges and measure how badly markets selling 50K USD worth of each cryptocurrency would crash the price. That's what he estimated. That would crash the price. Throughout this article, I would refer to the numbers of slippage. See the annex for a proper definition. I would later refine my slippage metric by selling more or less on each exchange, depending on the volume they processed. and changing the solid amount with regards to the currency market cap. I expect that the slippage should generally be a decreasing function of volume, but that some differences might show from one currency to another. After all, if you have a gargantuan volume on a given pair, there has to be a very high competition between market makers to satisfy the avid buyers and sellers. And that kind of competition is bound to densify order books and reduce spreads, right? Well, that's what you find on bitMEX. You find, 50-cent spreads. They used to be 1 cent spreads, but they had so much volume, they just said, hey, we're going to do 50 cent. And then, you know, it lessened all the overflow and the overload that they had with, just, every cent there's a different, buyer sell order set being met, and the matching engine, it gets overloaded pretty fairly easy in that regard. I believe. Now look, that's what he's talking about. Okay, so the more liquid there's more people willing to buy and sell it at different, spreads. The smallest spread is 1 cent. The smallest spread on BitMEX right now is 50 cent. They changed it, right? So well, it turned out that this was obvious. I'm sorry. Well, it turned out this was the obvious tendency. Yes, but where I had expected mild differences between currencies, I found ridiculously massive discrepancies between exchanges. Not the kind that could be easily hand waved away. Oh well, their users must behave differently, but the kind that can only be explained by some figures being overstated as much as 95%. Leading the pack is Okex, currently ranked number one exchange by volume with 1.7 billion fabricated volume on both CoinMarketCap and LiveCoin Watch websites. OKX is a ghost town, okay? A bit of wash trading and artificial volume inflation is to be expected in a thoroughly unregulated market. What I did not expect was the magnitude of the fraud. Consider the following chart. All right, we already looked at that first. All right, so it's representation of the average slippage and volume of all pairs among a selection of a score of cryptocurrencies with a daily volume over 100K over four major exchanges. OKX, Kraken, Bifinex, and GDAX. Over the course of 24 hours, you may, for example, read that the blue dot on the bottom right represents a GDAX pair with a volume close to 200 million and a slippage of less than 0.1%. The chart is striking. It shows how, although all first three exchanges seem to behave rather similarly, OKX pairs in red have had have all have a massively higher slippage with regards to the volume. Like I explained before, this can only mean that most of the volume OKX claims is completely fabricated. Besides, for legibility's sake, I elected to remove the data set all slippage over 4%. Okay. Reintroducing the ignored stuff, blah, 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 blah. Read it yourself. All right, bam. We're going to get all the way through to how bad is this? It's pretty bad. All right. So, I mean, Hawabi's a close runner up. Wow. Okay. That's interesting. 81% made up volume. All right. So, I'll link to the information. It's a pretty extensive. Uh, it's a pretty extensive article that gets into a lot of details and facts behind the slippage claims. It's worth noting, okay, that Bifinex is, like up there. So, um, what does that mean for people like me? I dedicate my channel to talking about the most liquid exchange, which is bitMEX, by the way, and their index that they use to calculate their futures contracts is they only use the data that comes from exchanges that actually have bank accounts tied to them, like GDAX, Kraken, Bitstamp. Okay, soon to be included in that is going to be Bittrex, according to what they've got listed on their website. They're getting rid of all these coins because, of course, they want a bank account. They want people to be able to exchange straight out for, not for tether, but for real fiat. Okay, and that's important, extremely important. But bitMEX, if you know anything about bitMEX, only thing you can do is send Bitcoin there and receive Bitcoin, nothing else. So that being said, they're all derivative contracts over there. This is a pure derivative market over at bitMEX, and that's interesting because that reminds me of Wall Street. The ETF funds are all derivatives, indexes that you can't trade, but they have futures contracts that you can trade based on these indexes, and that's exactly how Wall Street has been set up. It's not rigged, is it? Is it rigged? You can say there's a little bit of riggedness in every little market out there. I don't care if it's Bank of America or if it's Walmart. I mean, they're manipulated. They've done something. Okay, whatever it is, it's probably so small and you might not care. But sometimes it could be pretty big, like manipulating 80% of your order book. Okay. All right. Now look, let's go over to bitMEX, and we're gonna pull up or attempt to pull up. Okay, some information. Like right here, 24-hour volume. Look how easily they let you see it. That's how you know they're legit. You don't have to search for this information. It's right here on. You don't even have to have an account. You can just go to bitMEX. You don't have to log in, and bam, there you have it. You guys are watching me. I use Opera to do my trading because of the VPN that's available there. But look, check it out. It's for free. Now look, there's 24-hour volume right here. These contracts, each contract is equal to $1. Okay, that's how you. That's how they do contracts over here. So if they say there's 3 billion contracts that have been traded today, that's $3 billion. I can unhover around it and it tells you XBT. XBT is just the international symbol for Bitcoin. So it's international Bitcoin. Okay, XBT. It's BTC, same thing. XBT, same thing. Okay. So when you're not hovering, the number becomes exactly what you see right here. 300, 350,000 Bitcoins were traded over the last 24 hours. Okay. That's $3 billion. All right. Look at the open interest. I mean, all right. Let's compare this to Bifinex. All right. Where everyone believes, okay, they are the, most liquid place to go trade and trust. And no, they're not. Sorry. I hate to tell you that. And there's a lot of people. Now let me tell you one more thing that you might not know. All professional traders are trading on bitMEX. They're not at Bitfinex. They might look at Bitfinex, but I don't know why they even look at it. Like I notice a lot of professional traders that actually look at Bitfinex data like it's the go-to data. It's not. It's rigged. It is not. You want to look at all the major exchanges that are tied to fiat. That's what you want to look at. You want to create your own index, and that's what I'm going to show you guys how to do in my next video. We're going to create our own index on TradingView. All right, we're going to gather our own, like from four or five exchanges, and we're going to combine them into one ticket where we can actually watch the price move up. Now, can we trade against it? Of course, because it'll be decent volume data right from. But we're going to get into that. It's a little science behind it and a little math behind it, but I can put it together. I kind of know how to do that. I learned how to do that. And we're going to look at it. We're going to use it to basically as an indicator, okay? Now look, here's Bitfinex, and this is kind of hard to do for me. I don't never really go here, but let's go to market statistics. Maybe that's a place to go. Let me blow this up. Okay, and then we're gonna click on volume. Not that hard to get to. And under volume, we're just gonna go to USD, BTC. And yesterday this was 58,000 Bitcoins. This is the past 24 hours, okay? And this is the past 7 days. They've traded this much in in a week. 1 week. 1 week worth of volume is equal to 1 day, close to 1 day of volume for bitMEX. All right, so that's like 7 times more volume over on bitMEX. Just so you guys know, okay? Because I get so upset because people are always talking about Bifinex, and it's just crazy. I can't believe they can't do this on their own. But okay, now you guys know, okay? And damn near the volume that's over there at Bitfinex is fucking rigged. And that's terrible. I don't really appreciate that kind of stuff because that was the first place I actually started trading Bitcoin on was Bitfinex. As soon as I heard about Tether and then how they said they didn't want to accept any US customers and all that, I just was kind of like, I didn't care about the US customer thing, but it was something about that Tether. And I watched the guy, a young guy, man, and he was talking about how he didn't trust Tether. I think it was, what was his name? Jesus, I can't remember his channel, but he's really into Vertcoin and Litecoin. He's a little young white dude. He's pretty cool. He's pretty smart, and I just can't remember his name right now. I'm sorry for that, but okay, you guys, you know what? I'm gonna sum this up right now, and I'm gonna get this out there and published. And I hope you guys enjoyed this. I'll do another video uh, really soon, and it's going to be about a couple of things. I got a lot of things to cover. I'm kind of happy to do this. Thanks, peace, and profit.